Welcome everyone to this session. We obviously know most of you here, but in case you don't know me, I'm Callum Floyd and I'm Managing Director of Franchize Consultants. So welcome to this session on our franchising sentiment and trends survey. Want to begin in advance by thanking Sally Knight of Franchise New Zealand Media, Brad Jacobs of the Coffee Club, and Daniel Cloete, who are also going from Westpac, who are also going to contribute to this session with their unique perspectives, which will be really relevant to this session. Really interested in questions in the session as well. So please use, I guess, to begin with, the online chat area. Let's get that open. If you're okay to jot some things down there, I think we will try and look to address things once we get through the presentation. We've got a fair bit to get through, and then have a bit of a look at those sort of questions or comments that you've got there in that area, and also if you've got any questions you want to verbalize, and let's have a good chat at the end. As always, we try and keep things as punctual as possible, so we'll definitely look to round up by 3 o'clock. So in terms of the session today, we're going to talk about the survey. We're going to talk about sort of 5 key areas of focus that we see being important at a high level. Following that, or taking that into account, we're going to hear from Brad, we're going to hear from Daniel, hear from Sally, and then we'll have a roundup. So just a bit of background on us to begin with. Really, we'll just keep it short. This is Franchize Consultants' 35th year supporting franchising in New Zealand, helping companies get established as franchise systems, get their structure and strategy right, supporting established franchising networks to review and improve performance for franchisors and for franchisees and the system overall, and really helping systems to adapt to a changing landscape. You'll see our team there, a lot of experience there. I've been in Franchize Consultants for 21 years of my 28 years involved in franchising, but there are a couple of consultants there who well exceed me in more than 25 years at Franchize Consultants, and some on the call here for more than 10 years. So that's us. In terms of the actual survey itself, this is actually the 44th time that we've run the survey. We ran it quarterly for a number of years, but annually, it's sort of the 12th or 13th time. It's a survey of franchisor views and a survey of service provider views of franchising generally. So both looking at the same perspective, but obviously from different perspectives, and we plot those separately. And it's exploring confidence and sentiment into a range of measures which are important to franchising for franchisees and franchisors. And this particular survey takes in the views of 34 franchisors and 16 service providers. So it's just important to look at the results in the context of that. And I think what I would say is that the views represent a wide range of sectors, and many of the sectors that are predominant in franchising, and we know many respondents who have told us are regulars in responding to the survey as well, which adds to the validity of what we're looking at. Just to begin with too, just like to thank all the people that did respond to the survey. For every survey respondent, we're donating $5 to Women's Refuge and to the Salvation Army, and we're contributing further to that to make sure it adds up to a decent number. So we're contributing $500 overall between those two charities for the great work that they do. So I guess just to begin with, in terms of the areas that we cover, many of you will be familiar with this, and we'll step through those in turn, but we've got general business conditions outlook towards franchisors' own growth prospects, a number of what you might regard as franchising growth drivers, and then franchisee growth and profitability prospects. And then we're asking about how you're finding things, what you see as your key challenge, what you see as key opportunities, but also what you see as the most impactful kind of mega trends that could influence your next 5 to 10 years. So let's take a look through that. So I guess just to begin with, would say that you know, in the context of the fact that the economy is still tough, it's still windy and a bit stormy out there. We've got inflation that is carrying on, high interest rates, borrowing costs, lower discretionary spend, continuing tight labour market, wage inflation, and construction, which is quite important to a number of sectors, is still slow. So just to give you a bit of a flavour of how some of the companies sort of indicated that they're finding things, you see, you know, we're affected by interest rates and the housing market in general. So if they improve, then our sector improves. Definitely a reduction in quote acceptances in our particular sector, likely due to the cost of living increases, putting pressure on non-essential spending. Retail, still a shortage of staff and a real pullback in consumer spend. So some real common themes coming through. Looking forward, though, to access skilled migrants as potential new franchisees, and also as qualified staff or managers for our existing franchisees to help them grow. And then there were some real positive statements as well, but less so, as you can imagine, in the current environmental context. Travel is booming, so that was a real bright spot. And also sort of in the health and fitness and beauty area, you see a good example, demand is rebounding in the service and hair sector. We expect to see franchise demand start to recover in 2024. So just a little bit of a flavour there in terms of, you know, general conditions. It's also, you know, we see some of those areas or headwinds. It's useful just to do a little bit of a dive into New Zealand stats. Data, and one of the interesting ones around labour is labour costs, and they measure total or average total hourly earnings across a range of different industry sectors, and we picked out three that are quite predominant in franchising, or where franchising is quite predominant: retail, accommodation and food, and construction. And you can see since sort of December 2020, if we're thinking about construction, you know, average rates from about $30 increasing up to about 39. If it's retail trade, sort of 25 through to, you know, a bit over 30. And if it's accommodation and food services, then sort of 23 all the way up to 30. So that's, you know, that's a lot that you and your franchisees have had to contend with from just that one particular area alone. And it's quite staggering when you look at what sort of that growth in sort of dollar number might have been during that time for a sort of a like-for-like workforce. If it was in the last year, it's increased 5, 6 or 9% respectively, or over 24 months, 14 to 17% respectively, or 3 years, you know, 24, 31 and 22% growth. So, you know, no wonder it's a challenge out there for some of your company units and franchisee units in that particular domain. Anyway, onto our survey and our results. One of the first things that we look at is the sentiment towards general business conditions. And on all of these charts, I've got a, you know, big blue line, which is franchisors, and the red line is from service providers in terms of what do they think it looks like for franchisors and franchising generally. And you can see that there's been quite a bounce from a franchisor point of view from what was a net negative 38% last year, same time, to a positive 26%. And that positive 26% really takes us to levels that we haven't seen since sort of 2017, 2018. So that is good to see, because we know that, you know, positivity itself can turn into to action. So that's good. Service providers a bit more positive, which is also interesting to see, because they can be a dour lot. So that's good. You might be thinking, well, you know, how does that compare to some of the other surveys that are out there, business confidence surveys? So we track the ANZ Business Confidence Survey and the NZIER surveys. And if you plot our sort of big, thick blue line next to those, you can see it does actually follow a similar path. And although franchisors generally have been more positive than both of those in many of the years, albeit the last one a little bit less so than the ANZ. So for businesses more generally, but including franchising from ANZ's point of view. Access to suitable franchisees. This actually is a little bit of a bright spot. And it's sentiment towards access to suitable franchisees, franchisors in general, expecting this to be much better. And in fact, it's actually the highest it's been since we started. Certainly in terms of all of the January observations that we have had, and service providers thinking the same thing as well, which is good. Access to financing, you'll see that there is an improved outlook. I mean, it's gone from a net negative 70%, which was kind of at the toughest that it had been at. It's at net zero at the moment, so people largely equivalent in terms of, you might say sort of half think it will be worse, half better. So on balance, it's zero. So it's a lot better than where it was, where the majority were expecting it to be worse 12 months ago. But you'll see it's a significant factor that people see as a challenge going forward, and we'll talk about that in more detail shortly. Availability of suitable locations. Actually, it's surprising when you see the number of available locations, certainly here in Newmarket on Broadway, that this isn't much higher, but you can see sort of net sort of 9% positive. And then when we think about the next one, which is access to suitable staff, which you'll know has been such a challenge, and I think topped the challenges 2 years ago. We've gone from net sort of negative 14% last year to a positive 21% net this year. So much improved, and some of the comments coming through too have indicated that things certainly are getting easier in that area, which is great to hear, because many of your companies will have very successful franchisees who could grow faster if only they could find the right people to grow their teams. Franchisee sales levels were also positive there, sort of net 13% to 20%, so improvement there. And you can see service provider also improving in their outlook. So it's nice to see an expectation on balance that franchisee top line is going to be improving. But when we dig down into, well, what about operating cost side, then we're still definitely in negative territory, in the sense that we expect it to be tougher, and there's some more inflationary pressures there on the operating cost side, both in terms of supplies, but also in terms of operating expenditure. So we're not as down as we were last year in terms of, it was sort of a negative 73%, but this year minus 46. So still pretty negative in terms of our outlook towards that. And then, of course, that is going to have an impact when it flows through to the bottom line. So you can see that there's an expectation that franchisee profitability levels, on balance, you got a sort of a net negative 14% versus the minus 13%. So largely at the same sort of situation as last year. In terms of franchisors' own growth prospects, you can see an improvement there. It was sort of right in the middle again last year at sort of zero, and that's climbed to a positive 31%. Service providers, again, you can see much more positive again in the outlook for franchisors generally. So it's nice to see some improvements overall and a bit more of a positive picture overall, albeit, two challenging ones here you can see are really around that franchisee operating costs and the resulting impact on profitability, despite a suggestion that on balance, franchisee top line's improving. And of course, all of this has to be considered in the context of the fact you've got businesses involved in franchising and in our respondent base here who represent a vast array of industries and unique company situations. So you're going to have a broad spectrum of expectations. So just moving on now to thinking about what are the greatest challenge to franchising development. So it's a question that we ask all respondents here, the franchisors here. What do you see as the greatest challenge to franchising development in the next, or over the next year? And the top 5 challenges identified here. The first one really is access to finance, and you can see there were 9 mentions there and statements relating to that. Finding franchisees, 8 mentions, and then the finding suitable staff 7 mentions. And then the themes were franchisee cost of goods and OPEX, franchisee sales and income, maintaining franchisee profitability. So you can see there's they're not mutually exclusive, these things. Rising interest rates and cost of lending, investor confidence, economic concerns, and then government regulations and compliance a little bit further down the list. But it might be further down the list, but it's certainly identified, as you'll see, as an important trend impacting franchising in the next 5 to 10 years. Shortly. Okay, so if we look at those challenges in relation with previous years, what were the top 3? If we go back a few, well, 2021, obviously number one was COVID and the impact on the business. Today, it's the same as last year. So finance, number one, or access to finance, finding suitable franchisees, and finding suitable staff. Those are the top 3. Really the same list, the same order as last year. In terms of opportunity themes, we asked again franchisors, what do you see as that sort of the key opportunities for your franchise system development over the next 12 months? Technology was front and center in many comments, be it around making smarter use of available technologies to help with efficiencies, to help with diversification, to help with online sales, to make more of the information that you've already got in a smarter and more meaningful way. So there are a range of statements relating to the adoption of technology. A second key opportunity theme was around the fact that there are a number of factors relating to just the benefits of franchising versus someone being in a job, or someone looking to establish an independent business, or someone already in an independent business who might benefit from converting that to a franchise business. So that was quite a strong theme from many of the franchisors that were responding here, and hadn't really seen it to that extent before, which is quite interesting. Just a growth opportunity, opportunities through marketing, through new blood coming into the franchise system, be it staff or franchisees, opportunities for increased efficiencies, and then you can see the other statements mentioned there. And then this year again, like last year, we presented a range of, you might say, sort of mega trends, key factors impacting businesses, and these also reflect some categories that the Institute of Directors has asked directors about generally, and so we asked it last year and we asked it again this year. What do you see? What do franchisors see as the top trends impacting your franchise network for the next 5 to 10 years? So we're selecting from here the ones that we think are most impactful. And you can see the biggest in the dark blue for 24, and light blue was last year, is that future regulatory environment. So it's interesting that it wasn't featuring as a really important trend over the next 12 months, which maybe because of the change of government might be a factor. But if we think about it in a long-term sense, then actually, it's the one that we're highlighting the most as being the most potentially impactful. Certainly the frequency of it would suggest that that is the case. Changing customer expectations is the second one. So that's sort of identified by probably about 64% of franchisors, just up from last year as well. And then AI, which featured pretty small last year. Obviously there's, I guess there's been an explosion in the focus on AI and the tools that are available in the last 12 months. So perhaps not surprising that really has shot up in a massive way. And AI is certainly mentioned in some of the comments around opportunities for the next 12 months as well by some franchisors. And then following that, we've got changing demography and also diversity, changing community expectations, supply chain transparency, climate change, water and other resource management issues, modern slavery, and then the metaverse, including some of the immersive technologies like virtual reality and augmented reality. So there we have it. So those are sort of some of the key results from from our survey. And then I guess before going to the team for their perspectives, we'll just highlight, I guess from our point of view, what we see as 5 key areas perhaps for focus in 2024, taking that into consideration at a high level. And what I thought I would do is just highlight 3 that we mentioned last year that we thought were a really important focus. We don't want to have the same ones as last year. There is a little bit of overlap this year, but I would mention these 3 because I'm not mentioning them this year, but they're still blooming important. And we had a number of things to explain those. But the first one is just recognizing that you're a really essential leader in the franchise businesses that you're in. So make sure that you're actually taking time to look after yourself, because that is critical in a franchising business in particular. You're not just running a conventional business, you're managing the political environment and a range of stakeholders. It's a complex business. You've got increasing change, increasing adaptation. It is a very challenging business to lead. So number one, make sure you're looking after yourself. That was last year, and would still say that's really important to remember this year. The second one is, when you think about the access to suitable staff, which is such a driver for businesses, but also in terms of thinking about retention, which is really important for maintaining the knowledge and retaining productivity and all of those things, is perhaps to have that real focus on being an employer of choice within your specific sector. And like last year, we mentioned a whole lot of things that you can focus on to do that. Feel free to make contact if you want to remember what those were. And then the third one, because of the challenge seen around access to finance, is to really focus on being bankable for new franchisees, because obviously you can't grow if your new franchisees can't obtain bank funding. So that continues to be really important. But for this year, in terms of the top 5, we'd say really important areas of focus. Generally, the first one is to really help optimize franchisee and company owned unit performance and profit. If you remember back to those stats that we had in terms of franchisee operating costs and profitability, it'll be the same for your company units. It's so important that we focus on making their results an absolute winner, because that's what's going to underpin your long-term sustainability and franchise network value long-term as well. And if you've got strength there, you've got strength and optionality. So it's most important. The second thing we'd say, when we think about just the changing landscape economically, but also in terms of those different trends, you've got to be thinking about, what are the things that are opportunities? What are the things that are threats to your business? What are the strengths? What are the weaknesses? What are we going to do all about all of those things to either take advantage of the situation or to ameliorate the threat? Whatever the case may be, we've got to have a solid plan in place with some of those really good strategic planning principles in place as well. So I would say, make sure that we are completing and working to a really comprehensive strategic franchise or business plan. The third one is aligned with that, is that we have been through such a period of turmoil through COVID and the like, and the sort of recent tough economic conditions, where that as a byproduct there's been a real focus on the operational side of the business. But we really need to think also about what's changed and how does our franchise network need to adapt. What are some franchising best practices that we could perhaps adopt that can really help to get some better results from our franchisees and from our own business, and again build franchise system sustainability. The fourth one, just when we think about the need for change and also some of the pressures that franchisees are going to be facing, would say that, just to put a real emphasis on engaging cooperatively with your franchisees. So thinking about meaningful one-on-one time, whether it's via field visits, whether it's via CEO visits, whether it's through regional meetings, conferences, it might be performance groups, it might be how you engage with your advisory council with franchisees, but to really think about how you're engaging with franchisees cooperatively and building the relationship there. because that's going to be money in the bank in terms of helping to navigate the future and make changes that are important. And that leads us into the fifth point, which is just to really focus on change management. You're always, as franchisors, making changes, whether it's even just introducing a new name badge through to a new IT system, or it might be that you actually have to redefine roles and think again about what some of your franchise fees might be. It's more important than ever to be quite sophisticated about that change management and how we can really bring franchisees on the journey in a way that actually has them adopting and saying yes to the change rather than, feeling reluctant and highly resistant. So there you have it. Those are what we'd identify as 5 key suggested areas of focus, quite high level, but obviously you can drill down a lot into that. Feel free again to make contact on that. But anyway, without further ado, that's clearly enough from me at this stage. Let's get some perspectives from the franchising world as well. Perhaps starting with Brad Jacobs. And many of you will know Brad, of course, but Brad's director of the Coffee Club in New Zealand. And Brad, along with his business partner, Andy Lucas, brought the Coffee Club to New Zealand. Must be almost 20 years ago now, Brad. And Brad is also chair for the second time of the Franchise Association. So thank you, Brad. And is it 20 years?
It was 18 at the end of last year. So yeah, getting close.
Yeah, for sure. So yeah, thanks for joining us today and offering your thoughts. So I wanted just to begin with, what do you think about what you've heard in terms of the sentiment and what the sort of the information is telling us? Does that sort of resonate with you or not?
Yes, very much so. I'm not surprised to see a good rebound on most of the categories, if you like, or most of the themes. But at the same time, not surprised to see that while there's a lot of rebound, that many of them are still, reasonably cautious or low as well. That probably sits pretty much with where I'm thinking on a number of them. In terms of the main things, I guess, if you like, again, not very surprised to see that staffing is still up there, for the fourth year in a row being in the top 3. I think that is still an ongoing challenge for many people. So yeah, that wasn't a great surprise either. And I guess, suitable franchisees being in there, for 3 of the last 4 years is probably not a huge surprise either. So we're certainly starting to see an improve in franchisee inquiry, but certainly not back to the level of 2019 yet. No.
Brilliant. Thanks, Brad. And I suppose in terms of the biggest challenges, I mean, would those be it? The staffing and suitable franchisees, or is there something else that's really on the horizon that you're seeing, whether it's for you or for franchisors generally, that that is a particular hurdle in the year or the years ahead?
Yeah, maybe I could answer that in 2 ways. If I put my sort of hat on, thinking about franchisees, there's still a lot of cost pressure on franchisees, no doubt about it. There is still a lot of challenges with raw costs and labour costs, and in our world being very tenancy based, store based, and having a lot of stores in big retail environments, a lot of our leases are tied into CPI based increases or inflation based increases. So franchisees are still being hit with some fairly significant rent increases from particularly the very large landlords who just won't budge from their leases. So while sales are certainly showing improvement, I think you've got to be careful there that a lot of that increase in sales is coming from menu price increase as opposed to transaction count increase, and they're still seeing a lot of pressure on them from costs. So yeah, I think that's probably still the biggest thing for franchisees. Certainly staffing is still there in the back of franchisees' minds, but it's not what it was like a year ago. If I went into any of our cafes a year or so ago, every franchisee wanted to talk to me about how am I even going to open tomorrow? I just cannot hire a single person. What do I do? So that has certainly calmed, which is good. In terms of franchisor, yes, I think access to franchisees is definitely still a big concern. But even sort of above that is, probably the biggest thing that we struggled with last year. We opened 5 new cafes last year. Construction costs are really, really challenging. And that was probably the most difficult 5 stores I've ever had to build ever. And
Wow.
it probably just about killed me at the end of the year. There isn't a lot of development. We've had 2 or 3 smaller landlords where we had agreements signed, put their developments on ice because they simply can't make the development stack up anymore. They'd have to come back looking for a level of rent that they know that people just can't pay. So yeah, I think that is still going to be a challenge for the year ahead as well. That even if you have got in our world where it's again store-based, even if you've got a great franchisee there in a suitable location, actually making the whole thing stack up is still going to be a bit of a challenge.
Interesting. And I guess that's particularly an issue for you because typically you will go into a new development. So would that be fair to say?
Yeah. Yes, and I think it obviously there's a whole heap of reasons why those construction costs have crept so much, but there is a lot more. There's a lot more around the council and regulation side of things that's horrendous now. The process there and the costs involved with that. The actual sub trades themselves, electricians, plumbers, etc. The very labour-based sub trades. And then just the raw material costs, board and tiles, carpet, whatever it might be. There's just been creep on every area. So,
yep. Well, thank you for that. And I guess just lastly, what's an example of something that you're working on that will be a great help for franchisees and or the franchise system?
I've talked about this before, in that at the start of COVID, we probably got caught with not as good a technology as we should have had. And we've spent a lot of time over the last couple of years improving that. We're in the process at the moment of rolling out a complete new point of sale system to all of our 67 cafes, completely at the franchisor's cost. So it's a huge investment for us. It allows a number of things to happen in the store. It'll take our VIP loyalty card completely digital. It'll allow us to introduce a second tier free loyalty program because our current VIP card is a paid loyalty system, one of the only ones in the country. It'll allow full self-ordering at the table in every single cafe. We're about 45 cafes live now. And it just allows us to keep innovating with a whole heap of single-use offers, limited time stuff, better communication with the cafes. So yeah, we made that call sort of middle of last year that franchisees just weren't in a position to fund it, but it was essential for what we needed to do. So we would fund it for them. So it's been a big process, but and of course on top of the actual hardware and software costs, we had to bring 2 people onto the team to actually do the rollout. Yep. So it's come with a significant labour cost to us as well.
Oh, well done, Brad. That sounds like a significant initiative and really well done. You can just imagine that sort of the flow through benefits from that for you as a system, but the franchisees, but by making it better for them first. So well done.
No worries. Thank you.
Thank you for sharing that. And I'm sure that people have some questions for Brad. Maybe jot them down or hold on until the end, and I'm sure we have a few minutes there. We'll move now on to Daniel Cloete, one of New Zealand's leading bankers, many of you will know, and long-term leader of the franchising division at Westpac. And Westpac, as you know, is a great supporter of New Zealand franchising for many years. How many years has it been, Daniel?
Are you talking about me or are you talking about the bank? So the bank.
I was thinking about you to begin with, Daniel, then perhaps the bank.
Yeah, and it's probably 20 plus for me as well. So that's very good.
Awesome. Well, look, Daniel, you've got a great view of many systems and sectors. So just to begin with, good to ask you what you're seeing in general in relation to franchisee and franchisor performance for the types of businesses that you'll bank and others.
Yes, so I'm probably just going to make a few general remarks and would be more than welcome some questions at the end on specific concerns, given that financing is one of the items that people are concerned about. I'd say confidence seemed to be up a bit and we're getting a bit of inquiry, but I have to say they're not all converting. So that probably reflects, the uncertainty in the economy. On business resales, there seemed to be a gap between what sellers want and what the buyers want to pay, again, reflecting that uncertainty. So, that's just that you see in the market. But in general, I have to say that sales of our customers seem to be holding up well, but it is very industry specific. And even within the same industry, it would be quite different with different systems. So that's quite interesting.
Okay, no, thanks for that, Daniel. Well, then I guess, having seen, the sentiment and the sort of the challenge identified about access to finance, which can mean a number of things. I'm sure you'll challenge the challenge, but also comment on the challenge. Why do you think that franchisors are suggesting that access to finance is going to be harder again?
Right. So I think the first, like I said, revenue seemed to be fine. So with resales, for instance, was a good example. We find that there's significant cost increases. And because of that, there's a profit squeeze, and lower profit influence the ability to do business lending. So, that's quite significant with those resales. And at the same time, in addition, the testing rate on home lending used by the banks in general has increased from around 7 to around 9. And that also influences affordability on the secured side significantly. So, that's already two things that influence the ability to fund. And then higher interest rates means financing is now a real cost of doing business again. So people have to really calculate that. So I would say all of those factors make getting funding more demanding. But at the same time, the possible easing of the triple CFA this year, I think under the new government, would assist quite a bit with the ease of funding. So that's a positive coming through again.
So I guess just a couple of things on that. One is that I think probably last year we were talking about the triple CFA as perhaps one of the reasons that it was appearing, well, in practice it was more difficult for some around funding because there were more hoops to jump through. It's harder to apply and to get everything together that is needed. What was the other point? There's something else there as well. Oh, yes, no, I know what it is. So there's a question that we had actually in the survey or a statement around accreditation, and without mentioning any sectors, someone mentioned that they thought that maybe their particular sector had been blacklisted from banking accreditation, not specifying any banks, but any comments, I suppose, on any sectors and attitude toward lending?
Yeah, so that's to do with the appetite for business lending, I suppose. Now, on that, we've got specific franchise lending policies. I can't really talk for other banks there, but if the applicant meets those policies, we can do the lending. So there's no issue there. And we're certainly very keen to lend to potential franchisees. By that, we really support the growth of the franchisors and the franchisees, which is our customers in the end. So I suppose the answer is no, the appetite haven't changed. Some of these fundamental drivers have changed, which might make it a bit harder. But if the business is profitable, we certainly do want to do the lending. And there's no change from our side, not even industry specific. Again, like I said, it's quite interesting. Some of the industries you mentioned, Callum, before are struggling a bit. But even within those industries, there's parts that seem to be going quite well, and they do meet the criteria quite easily. So that's probably the point. So my last point there is really about, what can franchisors do to support lending going forward. And, really two things there. First thing is franchisors can support lending by making sure their systems remain profitable. And then the second thing is that they continue to adapt to the changing market conditions, because things are very changeable, a lot of changes in the last year or two. So really the ones that did that are the ones that really now in a good position to make use of opportunities. And there certainly is a lot of opportunities out there at the moment. So if they do those two things, I think, the franchisees can get the lending. And it's also interesting that in some cases, the franchisors' equity requirements are actually stricter than ours. So, that just sort of proves that. That's mainly franchisors that understand the model quite well, and they understand what it takes to be profitable as well.
Brilliant. Thank you, Daniel, for that. Great thoughts and insights there. And there may well be a question that, or a couple of questions at the end there, if that's okay. Well done. Let's now move on to Sally Knight of Franchise New Zealand Media. I'm sure everyone here knows Sally, and Sally is the General Manager of Franchise New Zealand Media. And I think you would say, well, actually, how many is it rude to ask, Sally, how many years? It's got to be more than 20 years or thereabouts.
We're 25 now, with a little break in the middle, but
yes, there you go. So a lot of in-depth franchising experience there from New Zealand's leading news and franchise promotions publications. So Sally, I wonder if you can provide us with a little bit of a window to begin with into what patterns that you're seeing in terms of franchising and inquiry, but also some tips and suggestions around franchisors in terms of recruitment marketing. So just to begin with, I wonder if sort of like previous sessions, can you give us a sense of some of the inquiry patterns on your media, and are you seeing similar or different levels of interest compared to that sort of 2023 or 2022 and also COVID times?
Yeah, well, in terms of magazine inquiries, 2023 started quite strongly thanks to the wet weather, and rose throughout 23 to the highest levels of inquiries that we'd seen in 6 years. So that was very encouraging. And then 2024 started more quietly, I think thanks to the better weather. People were spending less time on devices and in front of their computers. But since basically in this last 6 weeks, we've seen much higher levels of inquiries for more information from advertisers, specifically franchisors. And this seems to imply that I think people have done their base research and are perhaps now better pre-qualified and ready to buy. We've had more repeat visitors to franchise.co.nz. They're spending longer on the site. More individuals are reaching out to an average of 1.8 franchised businesses, as I worked it out today.
Yeah.
And again, these figures are the highest we've seen since pre-COVID years. Yep. I think if previous patterns hold, we should then see a greater number of inquiries over the next few months for information from service providers as these potential buyers move through to the next stage of the purchase cycle. But I do have a comment for franchisors. Please do check your contact details in the directory of franchising are up to date, and ensure that you respond quickly and with serious intent to inquirers, because I have recently spoken to several quite well qualified prospective franchisees who've been unable to reach franchisors at all. I guess in the last couple of weeks, that's people taking a well-earned break, but it doesn't pay to take your eye off that ball. Yeah.
Brilliant. Well done, Sally. And certainly if you get an inquiry come through in today's kind of real-time expectations in terms of responses, you'd really want to be responding, within 5 minutes, quarter of an hour or thereabouts, not the next day. Got to recognize that. And it's interesting to hear your metrics there in terms of inquiries, for your audience, 1.8 per person. So it's quite likely that it's on the same day. So you've got an immediate benchmark that they're benchmarking against when they're making the inquiry.
Yeah, I've noticed a couple of people inquiring twice for the same business. So I've shot back to them and said, what's going on here? Have you not heard? So that was where I
Yep.
picked that up from.
Yep. Okay. So I suppose, when you're thinking about that sort of 1.8, or, that's more than one inquiry from the same individual. What kind of tips have you got for franchisors to make their, I suppose, their recruitment marketing campaigns more compelling, or how they're handling things to make the most of it?
Well, I mean, we definitely seeing, businesses still discovering franchising as a way of growing, and existing franchises constantly finding new ways of expanding their brands. We were actually lucky enough to be visiting some franchises in the South Island over Christmas, and Simon and Lorraine actually went into a couple of Cookie Times new retail outlets, which are fantastically themed stores where you can get everything from coffee to salted caramel shakes and bags of broken biscuits and cookie munch eye masks, I think. But those new cookie bars are a good example of how they've been extending that brand, and that great franchises never stand still with what they're doing. We're seeing, in terms of where people are coming from, there's definitely a slightly stronger level of inquiry from Asian ethnicities at the moment, which is backed up by the Westpac Economic Overview from October last year, which was commenting on large numbers of immigrants from India, the Philippines, and China.
Yep.
And we've got that on our website if you need to reread that or haven't seen it. The about 65% of inquiries for franchises in January were from people whose names suggested they were from Asian origin. I don't know precisely, but most of these people who are already in New Zealand, not those hoping to get into the country. So we have quite a large platform here of people, and you need to be making sure that you are taking inquiries from them seriously, and perhaps putting practices in place to attract franchisees from those sectors. But one of the Westpac report also suggested there could be less wealth coming in with these more recent immigrants than in the past. So, although that might help the future viability of industries which are relying heavily on staffing, like hospo and retail, it might mean also that lower investment level or part-time side hustle franchises could be more attractive again. And again, that's supported by evidence from our own records over the last 6 weeks, where I was seeing almost twice as many inquiries for businesses at the sort of the under 75k level as those requiring higher investment levels. And what can you do to address those opportunities right now? I mean, there's a very extreme example with Jim's Cleaning offering free franchises to redundant Godfrey's staff at the moment to help them meet consumer demand for services. But if you can't go that far, obviously, but if your workload is going to exceed capacity, then get that message out there as loudly as you can, so that people know you've got work ready and available for them if they can buy into the business. I think although as Callum said, as you said, the travel seems to be the booming sector, that's likely to be more of a catch-up in spend rather than a long-term lifestyle strategy. So we've got to look at what people want from their lives once they've satisfied some of those more urgent needs, and what their long-term requirements are. With obviously property is one of those things that are hot all the time in competition with our sector of franchising. But we've got the new debt to income ratios that are coming in mid-year, and I think that they may make a business more attractive, and there'll be some side benefits for the building sector franchise as well, hopefully, in that, from new build exemptions there. So there'll definitely be, and possibly also for Brad with his construction woes with the the retail sector as well with stores. But I think we've although you're seeing franchisors less buoyant about franchisee profitability, it's making that focus on the better long-term return on investment with a franchise and or a business, and more emphasis we can give to the reduction of risk factor offered by franchising, I think then franchises become attractive as the investment of choice.
Great stuff. Good one. Well, thanks, Sally. That last point certainly correlates too with some of the comments that were coming through around the greatest opportunity franchisors were seeing, which sort of in terms of frequency was around some of the latent franchising benefits relative to employment, relative to running an independent business or starting one. So yeah, that's really good. Thank you very much for your insights there, Sally. Appreciate everyone coming today. There are a number of people that couldn't make it that are keen to see the results and hear the speakers. So we're going to organise that so we can share it. But I really appreciate all of you for coming and hearing the session today, and everyone here that might have contributed to the research by responding. We know it takes time, and very much appreciate your input and involvement there. Very much to Sally for your input and insight today. Thank you, and to Daniel and to Brad. And let's hope that we all collectively have a fantastic year ahead in franchising in New Zealand. Bye for now.